Welcome everyone. Today will be our first space. We are pleased to be joined by Nevin Freeman, CEO of the Reserve Protocol. My name is Braden, and I am co-hosting with Malo and Alex.
And my name's, well, it's not Malo, but there we go. It's my nickname. I'm from the UK. I got interested in the project in Feb 2019. My background's mostly IT, and now I run a small company to do with ERP systems. I do try and write a weekly Medium update on a Friday, and I'm a mod in the Telegram group.
Yeah, hey everyone, my name is Alex. I've been interested in the protocol since 2021. I actually heard about the app first since I'm from Venezuela. I have some family members using it. And yeah, ever since I saw the protocol, I fell in love with the vision, and that's it. So, Never, we're gonna ask you some questions. After we ask you the questions, everyone's gonna get a chance to actually ask Nevin some questions. We'll have a small Q&A with the community. So yeah, if you have any questions, just send me a DM, and you'll probably get to ask them. So, and remember, priority will be given to table members. So, Nevin, first question. Are you ready?
Yep, go for it.
Okay, let's go. So, Nevin, where do you see the greatest growth of our token adoption in the first 6 months after mainnet release?
That's a good question. So I think that there are two most natural types of RTokens at this point in history, given like what has been tokenized on chain so far, or basically like tokenized fiat and derivatives of tokenized fiat, like via DeFi protocols, are the most natural collateral tokens. So I think that the most natural RTokens at the beginning will be basically fiat baskets and derivative fiat baskets that accrue yield naturally. And so I think that in terms of where I see potential growth in RToken usage, obviously I can't predict the future, who knows what will happen exactly, would be, well, let me put it this way. So like in the Reserve app, I think that the like dollars plus yield type RTokens would be popular because if you are interested in having a dollar balance in crypto and stablecoins, why not also include some yield in that? I think the only reason why that would not happen is if people are turned off by the complexity and the potential risk, or just the confusion of like not understanding like, well, what is this thing? What are all these different weird collateral tokens? Can I trust this? But I personally predict that Reserve app users will be interested in that and will not be too bothered by the complexity. I think they'll warm up to it over time. So I do predict usage of the sort of dollars plus yield type coins within the Reserve app. And then similarly, I think that there's the potential for those like fiat plus yield RTokens, or really one of them most likely, to end up getting network effects within crypto trading more generally. And I think that will depend heavily on its sort of trajectory of adoption in terms of, these things kind of snowball. It's like if it gets picked up by certain large exchanges, then that will help to make it available and known to a large portion of crypto users. And so we'll have to see kind of how that plays out in the early days. But I think that eventually, I think over the course of time, we will see a snowball like that. But, we'll see. Obviously, I'm trying to hedge and not make predictions that I can't really be sure about here. And then the last thing I think is like a little bit more counterintuitive, which is that even if you have an RToken that is just pegged directly to, say, the US dollar and doesn't have any yield baked in, you can still build that out of collateral assets that do generate yield. And so that means that you could have a stable coin that is stable against the dollar, doesn't actually go up in value, but has quite a significant insurance pool because all of that revenue would go to RSR stakers. And so you would have higher staking demand on that token than one that was giving the yield to the stablecoin holders. And I think that's interesting because it allows you to create basically a version of RSV that has decentralized governance. Today, RSV is governed in a very centralized way, like we just have control of it. And so if any rebalancing needs to happen, we always have to approve that. Whereas you could have a more decentralized version of RSV because of the fact that there's money to be made staking on it and governing it. And so I think that that form of stablecoin could also gain in popularity if there are different outfits that are interested in using a decentralized stablecoin that is fully backed in a pretty straightforward way. And so I think that it's a subtle thing because that's something that like the end user probably won't think about that much. So it really comes down to, are there like fintech wallets, for example, that would be interested in that kind of approach? I know of one example case, a group that we've spoken to that has an interest and would like a more decentralized version of RSV. So I think there could end up being demand for that as well.
That's great to hear. I actually was thinking about what you said on complexity. I actually saw a chart, a flow chart a few days ago of a DeFi protocol that was just so complicated for the end user. Yeah,
Yeah,
the UX is impossible to manage.
yeah,
So I think having a version that is just a token that you just buy and you get yield and it's insured, it's gonna be a game changer. So that leads to my follow-up question. That's the first 6 months. What are the medium to long-term vision like after those 6 first months? What happens after that? Where do you see the greater growth after that?
yeah. That's a good question. So I think the short term is pretty clear, and the long term vision, at least what we hope for, is pretty clear. The midterm is actually, in a sense, less clear because it's harder to predict exactly what's going to get tokenized in what order, and it's hard to predict DeFi innovation. So like over the next year, maybe 2 years, I won't be surprised if there are further stablecoin derivatives produced by DeFi that would be interesting to wrap and create RTokens with. So like one example is like in our initial approach, we're not worrying too much about being able to accommodate LP tokens. Like if you put your capital into Uniswap and you get an LP token that represents that balance, the protocol doesn't perfectly accommodate using those as collateral, at least in an insured way. So there's further innovation that could be done that would accommodate those. But then I think that there could end up being other forms of wrapped dollar or fiat tokens as DeFi progresses that could be interesting. And so you could end up with RTokens that have somewhat different properties. In the longer term, as obviously as we've talked about a lot, the goal is to have RTokens that are not based on fiat money, and so that really comes down to the timeline and regulatory sort of situation when surrounding the tokenization of other financial assets, commodities and bonds and equities and so on and so forth. And so I think that it's pretty hard to predict the details there. But basically, the bet we're making is that, like here, let's step back and think about it this way. The way I see it, it's like the power of DeFi. If you have all financial assets tokenized and available on chain, like just imagine if right now all stocks and all commodities and various other financial assets were all tokenized in like a reliable way, not tokenized in like a synthetic way where you're not really sure if the peg is going to remain, but like tokenized by legitimate issuers who have actually held the other assets in custody and tokenized them, similar to Pax Gold. Like I think Pax Gold is an excellent flagship example of a tokenized asset that's really trustworthy, and you can buy those tokens and treat them like gold receipts. So if you just imagine that everything had been tokenized already, and that you could use any of it as collateral, or or in whatever way in all of DeFi, that would be actually quite cool. Like if you think about it, like the sorts of operations that we do in DeFi that we've sort of come to take for granted in the crypto world, are pretty, like, they're notably different. The sort of permissionless interaction, and liquidity formation and so on, compared to ordinary financial markets. Not to mention the 24/7 availability, etc. So I say that because it's part of my personal reasoning when I'm thinking about, well, are we going to, as a society, decide to tokenize all this stuff over time or not? Because right now, I think that there are legal barriers in place, that are making that not happen. I think it's not. I don't think it's really a technical challenge. I think it's really a regulatory and legal, and thus sort of political challenge. But the fact that all of this infrastructure within DeFi has been created, just sort of for the current crypto speculation playground. Like, there's obviously enough interest in trading and using existing cryptocurrencies and tokens on Ethereum and Solana and so on, that I think we're going to continue to see this really substantial pace of experimentation, and more and more interesting financial, like decentralized financial products, are going to come to exist. And so my personal, it's at least my hope, but it is sort of my anticipation, is that that the world will be unable to resist porting over existing financial assets into that world, because there's just more and more interesting functionality there. So this is a roundabout way of answering your question, Alex, but like, I think that because of that, we are going to see like all major financial assets tokenized eventually. And so then the long-term goal then is for the RToken system to be like really, really robust by that point, in terms of available governance mechanisms, and all the different mechanisms involved, so that with a very well developed community of enthusiasts who want to create non-fiat currencies and who understand how to do these kinds of, take the relevant sorts of governing actions, and so on and so forth, so that at that point the reserve community will be able to create non-fiat currencies based on that ever-growing availability of different kinds of asset backing. So that's kind of when I think about really the long-term like step change, totally different value that reserve could provide, that's where it is.
I agree. On-chain tokenization is inevitable. It's gonna happen sooner or later. So I'm gonna give my hand to Malo. So Malo?
Okay, hi. Next question. I've been having a look at the new version of the protocol, and I'm pretty interested in RSR buyback. So when the protocol gets rewards, it then uses those rewards to buy RSR for the stakers. I don't quite know exactly financially how it'll work, but obviously you're buying RSR on the market every day, I guess. So I'm pretty excited about that. Is there any part of the protocol that you're excited about, but you think people maybe are underestimating or are not aware of?
Yes. So this is actually not quite a mechanism of the protocol, but there's an implication of some of the mechanisms that I'm really excited about, that I think maybe others haven't quite had the time to think through and see yet. So let me try to describe this. There have been like sort of a few different attempts of making basket-backed assets on Ethereum that are somewhat related to what we're doing. So like OUSD is kind of the closest example of like a stablecoin that's meant to generate yield. That's comparable to some of the early RTokens we anticipate. Then there's also Yearn, where you can sort of deposit stable coins and they get managed by a quote unquote DAO. And then there's also set protocol where you can make like sort of predefined baskets of assets. The thing is, what we haven't seen yet is a stablecoin that has this interesting property of being fiat backed but generating yield, becoming sort of massively adopted as a default stablecoin in crypto. And if you think about that, that's a little weird because some of these products have existed for a while. So why is that not the case? Why are they not being treated like a replacement stablecoin? One hypothesis that I have is that when you look closely at them, you determine that they are securities under US law because of the fact that in the background, there's actually essentially a centralized team doing the management and deciding about, where is the capital going to be allocated. And so one thing I'm super excited about, and this is part of why it's taken us quite a long time to deploy the reserve protocols, because we decided early on to spend some time making sure to decentralize it enough. We are aiming to launch this protocol in such a way where the R tokens that people generate, if they use the default governance mechanism that is connected, and especially also with the evolving, like probably more and more decentralized versions of governance, that those R tokens will not be securities under US law. And that's really important because it means that, big, prominent, centralized exchanges will be happy to list them if they agree with our argument that they're not securities, right? And so that argument, for anyone who is like a bit of a crypto legal scholar who might be curious, is basically that you might buy this token or one of these R tokens with an expectation of profit, but that expectation of profit is not based on the efforts of others, so to speak. It's not based on the efforts of like any centralized issuer or particular third party where you don't have access to the information about the management, about what's going on, where you're just sort of blindly relying on them. Instead, the governance will be, fully visible online. You'll be able to see all relevant conversations about it. You'll be able to see actions being voted on. You'll be able to see actions or like changes that get voted into place before they actually get instituted. And so it's not just like a sort of clever loophole of like trying to skirt the laws. It really is actually creating a system that the securities regulations aren't necessary for. Like you don't need the sort of securities regime to protect the user because everything is transparent by default. And really securities laws are there to force, sort of closed centralized entities to disclose information that they wouldn't otherwise disclose. So not only, in my opinion, is it the case that R tokens with these governing mechanisms will not be classed as securities when lawyers do an analysis on them, but it's also the case that they don't need to be captured by that framework. So there isn't even a need for regulators to like change the laws to end up encompassing them in the future, because if you think about it, it's not really necessary for consumer protection. So anyway, that's a long answer, but basically, to answer your question, Malo, this part that I'm excited about that I think maybe is not as intuitive to everybody yet is just that if R tokens are not securities, then they can be listed on, like I said, major centralized exchanges, even in the US. And that's really cool, I think, because I think that might pave the way for a stablecoin that has yield baked in a decentralized way to become a default token within crypto. And you guys will get sick of me saying this. I just have to like always make it clear. It's like I don't know that that's going to happen. Like I can't control the legal interpretation of those exchange, listing teams. But that's our opinion, and we try to be pretty intellectually honest with ourselves about these sorts of things. So I'm excited about that possibility.
Cool. So once the DAO is set up and our tokens are truly decentralized, then it's just up to central exchange teams to decide what they think on the legal aspect.
Yeah, and like, we will definitely be able to talk to them and explain our analysis. And, but then different exchanges have different practices. Some of them have a team internally that does a legal analysis. Others ask you to provide an external legal opinion, where you basically have some external law firm that has said, well, here's our analysis, and then the exchange will rely on that opinion. So yeah, we've been sort of gearing up to make that case to exchanges, and we'll see how they respond to it.
Wow, cool. Okay, I'll pass you on to Braden now.
Cool.
Hey, so you said earlier that you could see a version of RSV which maintains peg with the US dollar, but still generate yield for insurers. Might this version of RSV overtake DAI for set it and forget it type of roles in smart contracts and trading pairs due to its more decentralized nature? And I have a follow-up after this.
It's an interesting question. When you say more decentralized, it would obviously mean more decentralized than current RSV. Do you mean more decentralized than DAI in some way, or no?
Well, I would just say more decentralized than the current RSV, yes.
Yeah. Yeah, so I mean, I do think that it would appeal more to the ideological contingent of crypto users who are excited about decentralization than the current RSV does. Like, I'll be more excited about it, honestly. So I think that it's certainly possible that it would end up. I mean, I do think that it's certainly possible that it could end up being massively used. Would it overtake DAI? Who knows? I think that the fundamental critique of DAI that we made a long time ago actually still stands in some sense, where the version of DAI that's not backed by fiat coins like USDC still has the scaling bottleneck. So, like, if the maker team or maker DAO were to conclude, were to try to like get away from that fiat coin backing, then that would hamper its scalability again. And so in that case, I think that it would be like pretty likely that more decentralized RToken would have a reasonable shot at overtaking DAI in DeFi in the next couple of years. The thing is that the way that DAI works today, it has solved the scalability bottleneck by just importing more centralization, basically, and just allowing people to mint DAI backed by USDC, essentially. And so, given that, I think I'd be pretty surprised if a new RSV token that was more decentralized overtook DAI in the short term. I think, long term, it's anyone's guess, because all sorts of things can happen. But I think in the short term, I'd be surprised.
Okay. Do you think this version of RSV could replace the current RSV in the app?
Yes, I think it could. Need to kind of hash out that debate with the team that's in charge of the app internally. But I do think that it would make sense. And I personally predict that will end up being what happens. Yeah, and part of that is because I think it's a version that would. I mean, obviously, it generates revenue for RSR stakers, which is something that we care about. So that's like a major incentive for the community to want to do that. And then another piece is that because it's more decentralized, other third parties, I think, will be more interested in using it. So, like, if you're another, crypto wallet maker or like fintech company that wants to offer stablecoins to your users, offering them RSV, I think, might feel a little weird because it's like, well, it's kind of governed by this other team. We've met them, they seem fine, but like, can we really trust at the end of the day that they're not going to do something shady? I think that there is some real, like, legitimate concern people could have there. I mean, obviously we're not going to do anything shady, but like, how would they know that, you know? So I think the version where you can actually reason it through and see like, oh no, they really don't have control over this. It's just sort of this process, and you can analyze the process. I think could be more attractive to other like third-party fintech and crypto providers. And so we have the incentive to offer something that is interoperable, right? Like it's better for our ecosystem, it's better for our app and our users if they can move those coins to, you know, many other different venues that also use the exact same coin. And so that's another reason why I think we would be tempted to make that switch.
That's a very interesting response. Thank you.
Yep.
I'm going to hand it back to Malo. Thank you for the response. Thank you.
Okay, so this is the last question from us, and then we're going to open it up to questions that Alex receives via DM. We've got about 4 at the moment, so if you send it in, we might get through them. We'll see. So, last question from us, Nevin, is what can you tell us about Reserve's roadmap to decentralize the app?
Yeah, that's a good one. So we have not picked an exact timeline for doing that, or like even a timeline that we're going to attempt to hit. But the team does keep in mind with every feature that we add, like we sort of kind of have to design it twice in our heads of like, okay, how are we going to implement it now? How are we going to implement it with on-chain transactions? So it's definitely become more of a focus over the past 6 months or so. And let's see, what else can I say about that? I mean, the main open question is just which sidechain, or L2. And so I think that it probably makes sense to give it a little bit longer because it's still early. You know, like we've been saying, it's early in sidechain world for a while now, but it really just still is. It's still hard to tell which of these is going to win out in terms of network effects and be most used. And that does make a big difference because it's like, well, you know, if we pick a sidechain that has nice technical properties, but nobody else is using it, then it's pretty inconvenient for the app user to have to switch out to something else rather than just moving their funds to use in the wide world of DeFi and so on. And also even the technical properties of these L2s and sidechains are evolving pretty quickly. So I think that, yeah, you know, if I had to guess like when it will happen, I would, well, no, I've learned it's not a good idea to make predictions about timing. So I'm not going to make any sort of guess about that. But I'll just say that it's something that, you know, we're really excited about, and we've been thinking about how to do it with all the different features. But then we still need to make that decision about sidechains. Let me say a few more things about this though that you guys might find interesting. So number one, it's like the need to switch to allowing users to hold their own keys and do their own transactions on a blockchain is has become like more and more clear to us over time. It's sort of for the same reasons that we had originally predicted, but we're just starting to feel it more and more, where right now, because users are transacting in our database, we have to worry about them as our financial customers. And what I mean by that is like there's a whole lot of regulations that we have to carefully comply with in terms of like every transaction a user does and the capital that they hold and so on. Whereas if you operate a crypto wallet where you allow people to hold their own keys, then they're not your customer in like a financial company sense. They're just like the user of some software you've built. And so you don't have nearly as much responsibility to know who they are, track their transactions, potentially freeze their funds, et cetera, et cetera. And so the amount of flexibility we can offer users will be a lot higher, and the set of people in the world that we can just say, feel free to use this software, do whatever you want with it, will also be higher. Whereas, for example, as a user, obviously if you're doing transactions on chain, we're not going to limit your transaction size. Whereas today in the app, transaction sizes are severely limited, and you have to go through more and more KYC and give us more and more documentation to be able to do larger transactions. And even then, they never become unlimited. They're always limited. And also, if our compliance team sees something that they don't like, they have the ability to just freeze your funds and take your money away. And so, yeah, in terms of like the expansion of the app, the usage around the world, and really the freedom that we can offer people, we think it's really crucial to make that transition to people doing transactions with their own keys. But there's a further layer of this, which we think about every once in a while. And this is kind of like, who knows if this will ever happen, because it's like pretty out there. But even if we, like, let's say we had made the transition to doing transactions for people doing transactions on chain with their own keys, there's still the fact that by default, we would have a central server that people are using to interact with their account. And we would, allow you to like save certain information about your account and so on and so forth. And the whole, like, maybe your app would actually be querying our server to find out about your balances on that blockchain, or maybe our server is querying, some API, like, Infura recently made it into the news because they had blocked, users in some nations, and so, like, basically with that central infrastructure, there's still like a lot of information about what's going on flowing through our servers. We've thought about the question of, would it be possible to actually design the application to be much more peer-to-peer? And it's pretty unclear whether this would be feasible, and if so, how it would work. But if you tried to do that, maybe you would have something where the actual client applications are communicating peer-to-peer. Maybe you'd have a version where everybody has like some sort of server application, but each person owns their own. And obviously that'd have to be like technically very simple. It wouldn't be that like everyone has to become a server administrator. But I just wanted to mention this as like, an interesting area that we've been thinking about. I guess I'll leave it at that for now, because it's like all the particular ideas are like very speculative. But we're interested in the possibility of the app being fully peer-to-peer and being serverless, in part because that would make it so that we could open source the app, and then anyone could fork that repository and deploy a new version of the app, such that even if the company that built the app went out of business, or the government told it to stop doing what it's doing in the US or whatever, the software would be there, and the network would exist in a peer-to-peer way rather than being based on our servers. So you could actually get an even greater level of censorship resistance, not just for people being able to access their tokens on a blockchain, with any wallet, including wallets other than ours, but even quite a lot of censorship resistance of that network itself, where it would be much harder to stop, RPay, as we call it, sort of this reserve user network from existing. So just mentioning that, like, something we think about. Again, I really have no idea if that would end up being technologically feasible, but it's something that we think would be really awesome if it could be done.
Wow. Okay, that's great. That's quite a few points that you've made there. So we've got this recording. People can go over it again. But I'm like you. I'm pretty interested to see which L2s are going to would try and win out, and how that space is going to work, and what they're going to offer in functionality. Okay, so that was our last question as admins, and we've got some questions that came through to Alex, and the first one I think that came through was from Dollar Question. So I'm just going to, hopefully I'll find these people before they finish talking, and I'll let them speak. So I'll add you as speaker, and then you can ask your own question to Nevin. So Dollar, I think you have the floor.
Hi.
Yeah, Dollar, if you raise your hand.
Hi.
Yeah, oh, perfect.
Thank you
You're
for
here.
taking the question. My question is for Nevin. What are your thoughts on the geopolitical factors of proliferating dollar-based stablecoins in like the current world environment, you know, with everything that's going on? Also with a possible US CBDC in the works. I'm just wondering how you generally thought about that.
Yeah. Obviously, the global political situation is very complicated and volatile right now. I guess if I'm just speaking for myself, I don't really have a clear view on what it all means yet. Honestly, I've just had to stay focused on, the protocol and what we're doing. So I've been following lightly, but I don't really have worked out any sort of thesis for what this is going to mean. You know, people have started to say all sorts of things. You know, you can find opinions in all directions about what this all means for the dollar, what this all means for cryptocurrency, etc. But I think it's a little bit too early to tell. So what I can say is that as stablecoins become more decentralized, I think that makes them more politically neutral. I think that there are levels of decentralization we really haven't reached yet with prominent stablecoins that would end up changing the way that they're used in harsh conditions like what we're seeing today. And so examples of that include basically either truly decentralized stablecoins that are algorithmic, but short of that, the sort of basket-backed approach adds layers of censorship resistance, where even if you have a coin that's backed by several centralized issuers, the fact that it's backed by many, many issuers, and those issuers can be swapped out via a decentralized process, it makes it so that if you're one of any of those issuers, you don't really feel as responsible for the usage of that derivative coin. And even if you did and tried to shut it off, you probably wouldn't be able to. And so that's one layer. Another is privacy. We really haven't seen a private stablecoin yet. And I think that we're going to. I think that, when we think about our users in Venezuela or Argentina or Colombia, they right now are enjoying privacy from each other and from the businesses that they transact with because of the fact that we're a normal sort of centralized fintech platform in a sense, where you're transacting in our database rather than on chain. And that means that if you go to the grocery store and you buy something, that grocery store can't see how much money you have. They can't see all of the other transactions you did that day or, forever with that key, the way that they could if you were doing those transactions on a public blockchain like Ethereum or even any one of these rollups. When we imagine going on chain and we imagine people going and doing a transaction at the grocery store, think about it. Like let's say you went to the grocery store you normally go to. Like I like to go to Trader Joe's. Let's say I go to Trader Joe's and I buy some food and I pay with cryptocurrency on a public blockchain, say just Ethereum. I know there's high gas fees, but let's say that you did that. Well, then, the person behind you, they also buy something. They send money to probably the same address that you sent it to. And so then they can look at a blockchain explorer and see what your public key is, and they can see how much money you have, and they can see, all the other transactions you did. They might be able to triangulate over the course of time what those other public addresses are, because they're going and transacting with the local economy as well. But also you could see, the funds that exist at that Trader Joe's address. And, if they move their funds to any sort of central company address, like you could see their whole, all of a bunch of their financial inner workings. And like, obviously, that's not something that people want by default. Like, people do not volunteer information about how much money they have and the transactions they make to one another, even often friends, much less, random strangers and all businesses you transact with. So I bring this up because we've seen a very mundane, practical need for privacy on chain. And so when we contemplate, going on chain with our app, we do think about which of these side chains will offer privacy, because we think that that's something our users are going to want. But if you imagine, in the current geopolitical circumstance, if there was a stablecoin that was substantially more decentralized, maybe it's an aggregated basket of assets, or it's algorithmic, and you imagine that it's also fully private, that's an interesting situation that could be used by actors that are under political pressure, maybe in a somewhat different way from existing stablecoins today. And maybe that would change, sort of how crypto is perceived. Maybe that would change, the utility of those stablecoins for different types of actors. So I bring that up just because that's a direction that I've been wondering in. I don't have any clear conclusions yet. Like, I hope to have some time to think more about that. And if I come to some interesting conclusions, be happy to talk about them.
Perfect. That's a
Thank
great
you.
answer, Nevin. So we got a question from Crypto for Gains. He can't talk right now, so I'm gonna read his question out loud.
Okay.
Nevin, he wants you to hear your opinion on the overall crypto market, not about price, but rather than adoption, keep challenges, win, losses, and what do you feel about where RSR fits into the crypto space?
Let me think about that question. Overall, crypto. I mean, it's hard to talk about the progress of crypto without talking about price, right? Because so much of the activity in crypto is about speculation. I think that, it's like, if the overall crypto market cycle continues, that means we're headed into a bear market. And if we head into a bear market, then that means that we'll have another period of sort of consolidation and building, right? Like, a lot of the more superfluous things will go away. Hopefully that talent will end up being scooped up by the more serious, more long-term projects. And I think that could be a healthy thing for the space in some sense. But I think that it'll be really interesting if that sort of 4-year market cycle of bull and bear, like, what if that doesn't continue, right? Like, what if sometime in the next 6 months we saw a new all-time high for Bitcoin? Like, I think that would really shake the whole crypto speculation ecosystem quite dramatically, because based on my conversations with people, including many sort of insider type people, I think that this assumption about the 4-year bull and bear cycle is quite baked in at this point. It's certainly baked in for me. Like, I can't help but anticipate that cycle would continue. Um, but it's like when a coin sort of reaches a new all-time high, then everyone's kind of on high alert, like looking around, being like, well, what's going to happen? Like, where's it going to go? And I think that sort of thing could happen with the crypto speculation cycle overall. If in the next 6 months, Bitcoin had another all-time high, people would be like, oh my God, everything we thought we knew is maybe wrong. So like, who knows what's going to happen? And so I don't think I would be surprised if that was the outcome, but it could be. And I think if that happens, I don't know. I don't know what that will lead to, but I think that that sort of energy of like, wait a minute, the things we thought we knew were wrong, and so now everyone has to be on high alert and like sort of pay attention. I could also see that being a very interesting time for crypto. Like, and I think that could, I think that could actually not just have impacts for speculators, but that could actually end up changing the global narrative on crypto, from I guess from what it is today to something more like more curious, more like more basically more wondering about whether it's here to stay. Because when you go through a bear cycle in crypto, at least based on my experience, it's actually kind of shocking how ready people are to decide, okay, it's over. Like, we're done. Like, we don't have to think about crypto anymore. That was just a bubble, and now the bubble's done, and we can go back to just thinking about the rest of the world and ordinary technology and so on. So I think if we go into a bear market, that will happen. Like, you'll see a lot of news articles writing it all off, being like, well, prices went down by 80%, 90%. So like, that turned out to be a mistake, and everyone who thought they were a genius is wrong, and so they're all idiots and we can move on, which is probably not true, but like, that could happen. Whereas if you sort of break out of the cycle, then that narrative can't really take hold anymore. It's like, okay, well, maybe this is real. So forgive me for talking about prices. Like, I know that wasn't really what the question is about, but when I think about crypto overall, I think so much emanates from what's happening speculatively, that like, if you just look at NFTs and all the crazy things people have tried with NFTs, well, obviously nobody would have tried any of that stuff if NFTs hadn't been, going through some sort of speculative bubble scenario where there was lots of money to be made. Like, obviously people flow into the space and try to do things because there's money to be made. So like, I think really you really can't get away from thinking about the prices and thinking about the speculation stuff if you want to think about that. In terms of where RSR fits in, well, I mean, obviously we're trying to build something different, that isn't fundamentally based on just that speculation cycle, because if the protocol works, then you'll be able to stake and earn rewards regardless of the speculative market cycle. And even though you earn those rewards paid in RSR, your cash flows, your anticipated cash flows, have nothing to do with the price of RSR, because you're just getting your share of the rewards that are being generated in RToken, of the yield that's generated in RToken. So, I think in the long term, if the project succeeds in the way that I want it to, the price of RSR will end up not having nearly as much to do with the price of Bitcoin and the rest of crypto as it does today. So I mean, maybe that was obvious, but I think that's my main thought there.
I agree. And with the whole political spectrum right now, it was great to see how people from one side of the political spectrum was talking about, how Russia was using duty-based sanctions and people were donating to Ukraine. So I guess cryptocurrency is a great instrument to be a politically neutral currency. So that's a reserve vision that has to create a politically neutral stablecoin. That's just great. That's what we need, really.
Yeah, I agree.
So I'm gonna head into Malo right now. Do we have any other questions?
We've got Jim Grimm has asked a couple of questions. We're going to have to be fairly mindful of time. This is due to finish at 6. So, Nevin, if you're still talking at 6, feel free to just wrap it up. But I'll just add Jim as a speaker now. Okay, Jim, if you can hear us, you're on. Okay, maybe just stop. Take off mute.
Hello, can you hear me now?
Yep, got you.
Okay, cool. Yeah, just had a couple of questions about the new stable coin. Just to check my understanding was correct. So RSX or whatever it'll end up being called, is that effectively a way of allowing regular people to put their money into Compound and Aave and get the interest that those lending protocols generate as a result? Because it seems, looking at it, that is the case. And if that is the case, how does the Reserve Protocol actually enable the on-off ramp of fiat into those protocols so quickly? Because I guess if you're a regular crypto user, you'd have to buy a stable coin and then invest that into Compound and Aave, whereas presumably in the app it'll be kind of split seconds to invest in that coin and withdraw into fiat as well. So yeah, interested in that one.
Yeah, totally. So I think that's a good interpretation. It does basically allow ordinary people to effectively get exposure to those DeFi dollars through Compound and Aave. But it also is meant to make it so that you can use that as a currency, right? So like we want there to be a network of people who are using that to buy things, not just to save. So you can use it to save, but also it's fully liquid. So that's an even cooler thing. You know, maybe you get paid, and maybe you're only holding that coin for a few days before you go spend it. You still get that small benefit of that yield all the time without having to think about it. And then on your question of, you know, how do you make it easy for the fiat on and off ramp? Well, at least for Reserve app users, it's very easy with all the infrastructure that the app team has already built. You know, you can easily get your money in and out from US dollars and Venezuelan bolivars, Argentine pesos, Colombian pesos, and recently Peruvian soles. So if you're a user in those markets, then we provide an easy fiat and on-off ramp. If you're a global user who isn't in one of those countries that the app currently services, then we don't really offer anything for that yet. And so in that situation, you know, our target is going to be making it available via, you know, the centralized exchange that you favor, you know, and there's obviously, you know, really only a handful of the big ones that like most people use around the world. And so we'll be interested in getting it listed on those to make it easily accessible to crypto folks.
Okay, that makes sense. And just a follow-up question around insurance of that new coin from RSR stakers. Given that Aave and Compound only offer over-collateralized loans, they've got liquidity provisions, and they've got their own insurance mechanisms within their own protocols. Is the risk for RSR stakers on this particular coin incredibly low? Because it does seem that that would be the case based on my kind of basic understanding of those DeFi lending protocols, which is obviously a great thing for RSR stakers, but I wasn't sure whether I'd missed anything on that point.
I think it's incredibly low. And, you know, I'm looking forward to staking my own RSR. I feel comfortable with it. I think, though, that you always have to keep in mind that the Reserve Protocol is an open platform where anyone can deploy a stablecoin. And so we might see some experimental RTokens where they're using collateral that is higher risk. And so, you know, I don't want to make any blanket statements because, you know, there could easily be RTokens that get offered to you or others later to stake on, and you do want to think about it. You know, I wouldn't say blindly stake on any RToken, but I think for the kind that we're talking about with the example of RSX that Sinatra has talked about in videos and so on, I think that that approach is relatively low risk. Yeah.
Okay, perfect.
I think we have time for one more quick question. So if we want to do one more, try to get it in, and then we'll be good.
I think, let me check if we have any more questions. So,
All right,
yeah, give me a second.
let me ask you a question. Who do
Okay.
you guys think Nevina is?
Oh,
I'm curious. I mean, maybe
Okay.
it's not fair because maybe you know and you're not supposed to say. So if you know, you can't say. But if you don't know, then I'm curious for your guess. I personally don't have a guess. I don't know who it is.
I don't think it's a he or a she. I think it's more like a DAO. I mean, there's no way it's one
Okay.
person,
Do you think
right?
it's like a shared account?
There's no way it's one person, right?
I think it's a Russian bot.
I agree. I
think
agree.
it's one person. I think it's one person. I think a DAO couldn't have agreed to make those weirdly doctored photos. It's got to be a single person.
It's definitely it's an interesting experiment. It's a good experiment.
Yeah, it's a weird phenomenon for me in particular.
I think an even better thing is, have you seen the Nevin channel?
The Nevin channel? What's the Nevin channel?
Oh man, there's a YouTube channel and a Twitter account. Go check it out.
Yeah.
The
It is
Nevin
post
channel.
deepfakes of popular movie scenes with your face in it.
Oh god.
It's like Nevina on steroids.
Man, that's pretty weird. That's one of the things I did not anticipate getting into this project, that sort of thing would occur. I thought about that.
It is
It's
what
just
it is,
the
man.
beginning.
Yeah.
That was
Okay.
weird.
Good. Well, thanks for your questions. This was fun.
It was really fun.
I'll talk to you guys soon.
Okay.
Take it
Thanks
easy.
very much.
Thank you for
Nevin.
being here, Nevin. We really appreciate you being here.
Yep. You're
And
very
thank you
welcome.
for the time.
Very welcome. All right. Talk to you guys later.